Today, we will analyze the market corrections. S&P 500, is it an uptrend reversal or is it a temporary dip? USD trends and sentiment indicators. Hello, everyone. This is Shilpa Raidas and Jay Vora, and we both welcome you to Midweek with Indiacharts. How are you doing, Jay?
I'm good. How are you?
I'm doing very good, Jay. Thank you so much. So, Jay, we have quite a lot of questions in our minds. I want to start off with talking about the correction. So we have seen some correction in the US indices in the past few trading sessions, right? Is the uptrend in the S&P 500 index reversing, or is this just a dip? And also, we have seen an interesting move in the dollar index and the USD INR as well. So what is your view, your take on this, Jay?
Yeah, so I'll quickly share my screen.
Yes.
So as you can see, S&P 500, this is the weekly chart. You can see that the S&P 500 is hovering around its upper end of the, resistance line. So basically, if we connect these resistance lines, so it is somewhere around that point. And also, this was something that we had discussed earlier that, if 123.6% retracement that breaks on the upside on a closing basis, then there is a chance that we see an up move towards 53.25, which is 138.2% of this entire decline.
Right.
Okay. So we have seen some sort of correction in the, we have seen some sort of up move in the week gone by. And then, this week we have seen some correction. Okay. So basically what is happening over here is that S&P 500 has been rising higher by taking support at the 20-day average. Okay. So to first of all say for any sort of weakness, we need to see S&P 500 trading below the orange line, which is the 20-day average. Okay. And once the daily averages breaks on the downside, that is where we can say that, the up move could be over and we are bracing ourselves for a correction. Also, when we look at the weekly chart of S&P 500, so over there as well, what we can see is that the RMI, which is a proprietary indicator, that seems to be reversing on the downside. And if we get a bearish crossover over here, okay, and we end up breaking the daily averages in S&P 500, then that's the point where we have to start thinking of a meaningful correction that can kick in for the S&P 500 index. But yes, so far we have been thinking of this entire move as a corrective pullback. And if that is true, then, maybe we are nearing to that entire up move, getting completed. But
Right.
like I told you, the break of the averages, that will be important. And honestly, there are some weird things that are happening in the US indices. So wait, let me show you this. Now you can see over here that the industrial and mining index, that has, tested the previous high. In fact, it had broken above that. But from there, we have seen some correction. The small cap index in the US, which is also known as Russell 2000, that is really struggling at higher levels over here. Okay. In fact, banks have made a newer high. It has broken past the previous high and they rose higher. But if you see, utility, they are in dumps. So very weird thing happening in the US indices. It is only metals and mining index which I have found which are very resilient, and of course the Nasdaq 100. But even in Nasdaq 100, I was checking the internal components, and say when I look at something like Apple, okay, which is like a heavyweight over there. So over there, you can see that Apple has been declining. In fact, when we look at the monthly chart, by tomorrow we are going to get a monthly close as well. Okay.
Right.
So if the Apple index, if the Apple stock closes below the 20-month average, okay, we are already seeing the RMI going into sell mode, and we are seeing some divergence over here. And this, mind you, is happening on a monthly chart, right? So that's where, a case of a deeper correction can kick in for the Apple index as well. So basically, just like the Indian indices where we have seen, breadth weakening, I mean, I could see many of the charts in the US indices, which are not doing that great. Okay. And that seems to be getting reflected when we look at, something like the US small cap index or even DJT, that is Dow Jones Transportation, it is not really making higher highs. And this is where basically we are seeing a massive divergence uh, between the indices in the US. So now, how does it end? We need to see, but definitely there are warning signs that are there. And like I mentioned to you, that we would want to see break of the averages, especially on the daily chart. Okay, that is the 20-day average and the 40-day average. Once that break on the downside, those will be the signs of weakness. But yes, I mean, it's long due for the cycle to get complete, because you can see that it gave a bullish crossover over year, okay, somewhere over here. And since then, it has been rising higher without completing the cycle. So I think somewhere down the line, this up move has to end. And even when we look at the monthly chart also, okay, I mean, it is reaching that upper Bollinger Band as well. And then, we are at this 138.2% retracement as well. So interesting times. We need to see basically, whether we end up seeing the reversal or no. And yes, like you mentioned that currencies are seeing good move. So even if you see the dollar index, and if I do the monthly chart, over there it was looking like that it may end up posting a negative close. But guess what? I mean, there has been a recovery in dollar index, and so far it is in green right now. Okay. And mind you, in this entire process, basically it has saved the 40-month exponential average, right? And on the weekly chart as well, you can see that it is in bullish mode. So, I think that there is a very strong case for the dollar index probably to rise higher towards 107, or even touch around these levels, which are 108 and 109. And this, if it happens, I mean, that should be negative for the equities in general, because that could probably tell us that people are moving into safe haven, and it is sort of a risk off environment that we see. So dollar index has an interesting setup. Okay, over here as well, in dollar index, what we would want is a break above the previous high, because mind you, the correction that we saw in the dollar index, it took support around the 61.8% retracement, and now it has started to rise higher. So even if we think of it in a conservative case, this can end up becoming ABC, and that will, sort of fuel the rally till 107, 108 levels, which, like I mentioned, may not bode well for the equities going forward. So a breakout is sort of, awaited in the dollar index. But when we see something like USD INR, which is more of a concern to us. So over there, you can see that the, USD INR that had made a new all-time high. Okay. From there has been some sort of cool off. But yes, I mean, I think in the broader scheme of things, while I was doing the wave counts, I mean, we can take it in a different way. So say we take this entire thing as wave one, wave two, and wave three starting, or we think of it as 1, 2, 3, 4, 5, and this as wave one, and this entire thing as wave two. So ultimately, I think wave three is starting. And if wave three is starting, the equality level comes to around 84.50, 84.44 in the near term. And if we go by the ratio, I mean, where wave three is 161.8% of wave one, if that has to happen, then 85.50, that could be sort of the upside levels to watch out for. And again, I mean, I think that if there will be pressure on the currency, so it may not necessarily, bode well with the Indian indices as well. So, when we put into context, I mean, all the setups, it seems like, we are at that point where a breakout in the currencies will happen. and that are likely to, sort of put pressure on the equity markets. And equity market is already seeing some, sort of loss of momentum on the upside, if you can say, especially for the US indices. So I think once we get a price confirmation from the US indices as well, that's where I think both this puzzle will get solved. That means, dollar index may end up rising higher, and the S&P 500, which is looking, like it is losing momentum on the upside, that may end up correcting as well. And that is what we have to be careful of in the days to come.
That's interesting. Thank you so much for giving us a clearer perspective, Jay. So when we met last week, you did mention that the sentiment indicators were in oversold zone and some pullback was due, right? We have also seen some pullback in the past few trading sessions. Is it over now, Jay, or can we expect some more pullback? And what's your view on the key Nifty indices right now, Jay?
Yes. So if we go to the, if we just revisit what the sentiment indicators are doing. So, firstly, we had spoken about the daily swing. At that time, I think it was somewhere around this point. From there, we have seen a bottom in the Nifty index. And from there, the daily swing has risen higher. And I think during the day, it had even gone to around 92 sort of levels. That means 92% of the FNO stocks were seeing a rise in momentum. Okay. But after that, in the last 1 hour or so, the Nifty index did correct a bit. And that's why this, indicator cooled off to 83%. But nevertheless, it is it is high reading. In fact, even when we look at average swing, okay, that was also in oversold zone. And typically when they both enter into an oversold zone, that's where you are very much assured that a short-term pullback can be in place. So basically a short-term pullback or a consolidation can be in place. Now, in fact, both of these are coming into overbought zone. Now, like we had mentioned, in many times in our past interaction as well, that these indicators work very well for the very, very short term. Okay. Like if you want to catch the top from 2 to 3 days perspective, that is where this becomes very helpful. So, when the reading was in oversold zone, that's where it was indicating a bounce could come. Now we have seen a 500-600 kind of 500-600 points kind of bounce from the lower levels. Okay. And if these indicators come towards this overbought zone, then I think there can be a pause or a correction that can follow. Now, we have been highlighting that the decline in the Nifty index has been 5-wave from the top, which means that we should be getting at least one more 5-wave decline in the days to come. So 5-wave occurs usually in the direction of the trend, right? So over here, we have seen a 5-wave decline from the top. That means in the short term, the direction is on the downside, right? So what we are seeing is that after a 5-wave decline, there is a pullback that we are seeing. And once this pullback is complete, that's where, we can see the next leg of 5-wave decline. So in that sense, the momentum swing that is, coming towards this overbought zone, that is hinting us that maybe the pullback that we are seeing from this low, okay, that is coming to an end. And if that is the case, then that means in overall context, this was wave A. What we are seeing right now is wave B. And now eventually we should end up seeing wave C on the downside. Okay. So that is what we need to brace ourselves for in the days to come. Now, in fact, one of the reason why we were strongly thinking of a bounce was because many of those short-term indicators, that were turning into oversold zone. So say, for example, if we see the percentage of stock above the 20-day SMA, okay, for the Nifty index, so that had come towards this oversold zone, okay. So after that, we saw a good pullback. In fact, for the small and the mid cap index, this reading had gone to almost around 3% or so, which was very, very oversold. And from there, we have seen a very good pullback. in small and the mid cap index. In fact, even when we see the percentage of stock with RMI buy, okay, that means percentage of stock where the RMI is getting into bullish mode. So in this correction, the reading had gone to almost 3. Okay, from there it has rebounded and now it is 81 for the small cap index. In fact, even if you see for the Nifty 50, it had come towards that oversold zone around the 20 mark, and from there we are seeing a rebound. So basically, small cap fell sharply from the top. Okay, so that's where we have seen a sharper pullback in the small and the mid cap index relative to the Nifty index. But most of the things which were basically pointing out towards oversold zone, those things have come out. Okay, and basically now we are seeing sort of neutral sentiment, or when we look at something like a daily swing, okay, that is actually indicating that maybe in the near term we are coming towards that overbought zone. Okay, so that is how the setup is now. So what do we do now, right? I mean, we have seen a pullback. The pullback was anticipated that it can probably be till 61.8% of the decline. Okay, it has nearly touched that level. So that level was somewhere around 22,215, and today's high was 22,193. So there is just 10, 12, 15 odd points left on the upside. Now, who knows, maybe tomorrow we end up slightly higher and then we correct. And that's where we end up testing the 61.8% retracement. In fact, interestingly, for many of the indices, this retracement level has been tested. So say, for example, the mid-cap index. So during the day, it was, running away. But ultimately, 61.8% retracement level, as you can see over here, that acted as a resistance. And from there, it has cooled off significantly from the highest point. In fact, if you see Nifty 500, okay, that was also running away, during the day. But again, that has pulled back and it is now within the 61.8% retracement level. Okay. In fact, I was seeing BSE all cap index as well, which basically includes all the companies of the BSE. And if we see that index, so basically that has exactly retraced 61.8% of the entire decline. So all this indices retracing back 61.8% of the previous decline. And the very short-term sentiment indicator, which is the daily swing, that is a proprietary indicator, that is coming towards overbought zone. That is sort of telling you that maybe we are getting into the overbought zone. Okay. And if if we are getting into an overbought zone, then maybe the short-term top is in place, or we should see a short-term top in a day or two. Okay. So what would be the confirmations that we would watch out for? So say, for example, if we see the Nifty index, when we see on the hourly chart, it seems to be rising in this channel. So if we see a break of this channel and the 40-day breaks on the downside, so that's where, that will be our first hint that probably the pullback is getting completed. So what we would then watch out for is that whether it is making a lower low or no. Okay. So step by step, all those things will start getting confirmed, that RMI will get into sell mode, averages will break, then the previous low will break. And once we start getting those confirmations, that will be the point to anticipate that the pullback is complete, and a correction is likely to follow in the days to come. So broadly, we had seen some meaningful correction in mid of the March. From there, from the oversold conditions, we have rebounded. And now what we have to watch out for is break of the support levels. So even on the daily chart, I would want Nifty index to trade below the blue line, which is the 40-day exponential average. Because over here, we broke this point for just 2 days, but again, Nifty index has reclaimed. So it is only when the Nifty index breaks and sustains meaningfully above the 40-day exponential average, that's where we'll end up, thinking of a correction. Now, also, people would say that why do you anticipate a medium term? So, I mean, why do you sort of why do you anticipate a bigger correction? So when we look at the diffusion indicator, okay, so there is something called as net new periodical high. Okay, so basically each of this period is smoothened with the 9-day average. Okay, so when we see this, what we are actually seeing is that for the 1 month highs, already, I mean, we are seeing it in negative. That means stocks are making 1 month new lows, and that's why we are seeing it in red. Okay, similarly, if you see net new one quarterly high, which means now there are almost around two stocks net basis, okay, net basis, that are making quarterly new lows, because the reading has turned in negative. And you can see that while we were continuously telling that the AD ratio was declining, okay, I mean, the Nifty index was rising higher, but the breadth was declining. This was one more such indicator, which was pointing out towards that, because the Nifty index was rising higher, but the stock which was making quarterly highs, that were declining consistently. And eventually it always happens that once there will be a rise. Once the momentum starts fading, you will see it flattening, and then it will start going down. Now, this
Right.
is what should be happening right now over here. In fact, even when we see the net 1 year new highs, okay, even that has deteriorated significantly. Now, whenever it does come in red, that's where we end up seeing those meaningful sort of corrections. So it could be a meaningful time-wise correction as well, or price-wise correction as well, right? But the broader point is that, when we see such things happening, usually the upside could be capped, and we might at least see a 5 to or 10% sort of corrections in the days to come. Okay, so that is how even this indicators, if you see, these are all poised. In fact, if you see for the small cap index, it has already turned significantly in red. Okay, and you can see over here that whenever it turns in red, we do end up seeing some sort of prolonged correction. I mean, this was the case for here as well. So obviously there will be pullbacks from time to time, but broadly in terms of trend, it should be headed lower. Now, something that we had seen similar over here, and now we are seeing something over here as well. So my guess is that till the time we don't end up seeing the weekly RMI cycles completing. So, this we have been telling this for, 2 to 3 weeks now, because when we see the weekly RMI across any of the indices, they have all gone in sell. So this is the weekly RMI of Nifty index, that is in sell. Okay. We have seen the weekly RMI in the Bank Nifty, that is in sell. If we see the weekly RMI in mid cap, that is in sell. If we see it in small cap, that is in sell. If we see it for 500, that is in sell. So everywhere we are seeing the RMI rolling over, and it is now turning down. And now they are significantly in sell mode with, significant negative divergence as well. And then on the other hand, we are seeing this indicator as well, that is suggesting that more stocks are making new lows for 1 year, 1 quarter, or 1 month. So that is somewhat suggesting that the Nifty index, and not just Nifty index, but many other indices are actually turning bearish, and they're entering the corrective phase. Now, whether are we going to see a sharp drop, or we are going to see a zigzag sort of correction. These are things that we'll only get to know once it unfolds. But the risk in the horizon is that we end up seeing a meaningful correction, either time-wise or price-wise, in the days and the weeks to come. So in that case, at least one thing could be clear in all this analysis, is that probably the upside could be capped in the near term. And if that is the case, then what we have to be prepared for is, how the downside plays out. So that's where, again, I mean, we'll have to go level by level. But broadly, when we see the weekly RMIs getting in sell mode, until and unless it doesn't come back towards the zero line and then gives a bullish crossover, ideally you want to be careful. Now, in such situations, what do we do is that, if you want to see, now say for example, for some reason, you feel that the stocks have bottomed out, or if you want to short any of the stocks in FNO, what you may actually want to do is that go to the heat map, okay? Note the date from where we have seen the top, or you can also see the bottom as well, okay? Say from here, from 20th of March, we have formed a bottom, and now we are in 27th March. So you can go to the heat maps in the FNO basket, okay? Do the, go to custom, and the lowest point was on 20th March, right? So we do 20th March to 27th, and over here, okay, whichever stocks that you see on the higher side, you see it in green, these are all the outperforming stocks, okay, in this entire pullback. But the ones, which are in red, basically these are the ones which are underperformers. So if at all the market turns on the downside, so these are the stocks probably where you would want to concentrate on, and probably where, if you have the setups, like say for example, I can see Infi, Wipro, LTI, Mindtree, TCS. So it is evidently saying that IT has been very weak in this entire pullback, right? So when I see the chart, I want to see whether that is really true or no on the index level as well. And I can see that the weekly averages over here are getting breached. The RMI is in sell. So what I would anticipate is that 40-week should be tested. And if that breaks on the downside, I think we are staring at a very meaningful correction. The reason why I tell this is because the rise from the low to high in the Nifty index, in the Nifty IT index, has been corrective. Okay. So basically, there is no way actually to count this rise as an impulse, because everything you see is overlapping over here. This still looks like 1, 2, 3, 4, 5, 6, 7, 8, and 9 legs, okay, on the weekly chart. But when we do the equality level, okay, when we do the equality level, that comes to around 37,000 or so. So it has done slightly more than the equality level as well. So again, it is telling you that the major ABC pullback could be over in IT, and the heat map is telling you that these are the components that are weak. So when the market goes on the downside, probably these are the stocks, which may correct a lot more, because, these are already turning weak. So that is how, you can probably take the help of the heat map as well to identify which are the stocks which are, weak or strong. The similar thing can be done on the index level as well. So that's where, if you're anticipating that the correction is getting complete, then that's where from the high to low, you would run you would run the custom dates, and you will get the result. So the ones which are at the higher levels, those are outperformers. The ones which are on the lower, at the bottom 5 or so, these are the underperformers. So that's how you can take actually the benefit of heat map and identify the stocks or the sector where you can put in money or you can go short.
That's very interesting, Jay. Thank you so much for giving us a good explanation about how we can use heat map to our best advantage. So as we could see, be it FNO basket or be it indices of your choice, you can actually check within a certain range of customized dates which stocks are doing well, which stocks aren't. Even if the indice is, going at a certain direction, it's trending. Within it also, could be some stocks that are weak, and that is where you have to, keep your eye. And that is where heat maps is just amazing tool that you can find on Strike, and it's so easy that it's on your fingertips. Okay, do you learn how to do it well? So for that, I'm going to leave a link down below for Strike. If you haven't subscribed as yet, you should do it right away. You get a 7 days free trial with it. So yes, that's a lot of time for you to test and trial the app. And also, I'm going to leave a link down for Twitter of Strike, so you can follow us there as well. We always give our latest updates first on Twitter and YouTube together. Okay. Of course, we are also present on other social media platforms like Instagram and Facebook and LinkedIn. So please feel free to join us there as well. Thank you so much, Jay, for the wonderful explanation. It was a lovely session today. I'm looking forward to seeing you next week. Take care. Yeah. Thank you so much.
Thank you.
Bye.